This is how you trade futures on Binance. But first off, what are futures? Futures are a synthetic contract based on a price of another asset. You trade the price without actually trading the coin, contrary to spot where you buy the coin with cash to sell it later on for a profit. Now, why trade futures, not spot? Well, futures gives you the options of going short and using leverage, but it comes at a risk of liquidation. So first off, let's allocate some funds into our futures wallet. Let's click on wallet, click on futures, click transfer. Now here you'll choose where you want to transfer from and here where you want to transfer to. I have them in my fundings account, so I'm click on spot, click on fundings, and let's click to. Here you have two choices of futures, CoinM futures and USDM futures. The difference between them is that USDM uses stable coins like USDT to trade and CoinM uses crypto assets. Most people use USDM because CoinM is more risky, because your asset that you are buying with is going up and down in value and the trade is as well. So let's click on USDM. Here you choose which coin you want to transfer and here you put in the amount. I'm just going to click on max, confirm transfer, and you're good to go. Now let's go to the futures page. Just click on the bottom here. There's a link in the description below that you can use to get a 10% discount on commissions on every trade. Now, a quick overview of the page. Here you have your trading pairs. Next to it, you have a thing called perp. This is short for perpetuals. Now there are two types of contracts, perpetual and delivery. Well, perpetual is just a future contract that doesn't have an expiry date, while delivery on the other hand does have an expiry date. It's right here. It's 06/28. 06 is the month, 28 is the day. So most people use perpetual because it doesn't have an expiration date. Here you choose which pair you want to trade. Now right next to it you'll see small candles right here. This is for you to view the chart. Next to it you have your calculator. Now the calculator, you can calculate your P&L, target price, liquidation price, max open price. It's simple and straight to the point. Like in the P&L you put your entry price, exit price, quantity, and you get your results right here. To the left here you have your margin mode. You have isolated and cross. Isolated is when the collateral that you have in your account is used to fund individual trades. So for instance, if you have $100 in your account and you fund $50 for a Bitcoin position and $50 for an XRP position, those are completely separate positions. So if one of them gets liquidated, the other one will not be touched. Cross margin, however, is where you are using all of the assets in your account to fund all of your positions. So if a trade loses, Binance takes equity out of the other trade and it can get drawn down. This is more risky. You can potentially lose on one trade the entire account. Now here you have your leverage. We do not recommend using high leverage because your whole account could be liquidated. It is very risky, especially if you're new to trading. What is leverage? Leverage is you borrowing money from Binance to enter a larger trade, but it comes with its own risks. Let's say you have $100 you want to trade with. Here is the profit percentage. Underneath it is no leverage profit, and underneath it is your 5x leverage profit. So a 25% profit on no leverage is 25 bucks. 75 is 75, 100% is $100 because you're only trading with $100. But if you have a 5x leverage, you enter the trade with $500. So 25% is $125, 50 is $250, and 100 is $500. This is leverage. Now here you have your order types. I'm gonna go through them quickly because if you don't know what these are, you shouldn't be trading futures. But if you want to know more about them, I'll leave a link in the bio to the previous video. You can click and see what they are and what they do in detail. So limit is where you want to buy at a certain price. Market is when you want to buy instantly. Stop limit is when you put in a stop price to trigger the limit order. And stop market is the same but at market order. Here you put in the price you want. If it's limit, if it's market, you don't put in the price. Here you put in the amount you want in USDT, or you can put it in Bitcoin. Here is your take profit and stop loss. Take profit here is, as the name suggests, you take your profit and get out of the trade when it hits a price you've put in. If you're going long, that price is above the entry price, and if you're going short, the price is lower. Now stop loss is a way to cut your losses short when the market doesn't want to go your way. You put in a price and it automatically closes your trade. If you're going long, it's under the entry price, and if you're going short, it is higher. Now, underneath it, you have your buy, long, sell, short. Long is just another word for buy, and short is another word for sell. Now at the bottom, you can see your open orders, positions. Now I'm gonna do a live trade with 125 leverage just to showcase how risky it can be. I'm gonna say it again, we do not recommend you use high leverage because your whole account can be liquidated. Here, let's put in the amount. Let's say you have a minimum here. Let's put in the minimum, 123 USDT. Put in your take profit. I want to go long at 61, let's say 100. And my stop loss is at 61 flat. Okay, now I'm gonna buy long. There you go, your order is created because it's a market order. You can see right here. Now, when we go down, you can see your open position. This is your position. Here you have details, perpetual, isolated 125x leverage. Here are your open orders. Here you can see your take profit and stop loss. Okay. Now here I already lost 3% in maybe 30 seconds, 40 seconds, 6%, 8%. I'm just gonna close it. You can close it right here. Now you can edit your TPSL and leverage over here. I'm gonna close it all at market price, and I will confirm it. See, this is how dangerous 125x or whatever leverage that you use. The more leverage you have, the more risky it is. So there you go. Now you know how to trade futures. See you in the next video.